Have you heard of the newest trade that's taking Wall Street by storm? No, it's not stocks, it's definitely not bonds, and it's not even AI hype. It's become so popular that it got officially given a name, the Debasement Trade. All of a sudden, the biggest institutional players in the world are hedging against the erosion of fiat money. The Wall Street Journal is even running headlines like, a new Wall Street trade is powering gold and hitting currencies. And they're not just talking about gold anymore. JP Morgan is straight up grouping gold and Bitcoin together under this exact label, which, if you've been around Bitcoin for more than 5 minutes, is pretty funny for JP Morgan specifically, because of course, I'm kidding about any of this being new. This is not a new trade at all. It's just a new name for something that Bitcoiners have been screaming into the void for over a decade. And gold bugs too, to be fair to them. So why is this happening now? Why is mainstream finance finally catching up? And why does this moment matter? Because it's hinting that we're on the verge of something big. The full-blown maturation of Bitcoin is no longer some tiny thing way out on the edge of the horizon. It's definitely already gotten started. So in this video, I'm breaking down what the debasement trade is, why it matters, and why mainstream media has just started catching on to what Bitcoiners have been saying all along, which is that if you don't learn to trade your fiat for Bitcoin, you're going to end up living in debasement. But first, real quick, my name is John from My Favorite Thing About Bitcoin. Been studying Bitcoin for several years, created this channel with the goal of helping others better understand and grow their conviction in Bitcoin. So hit the subscribe button and we'll get into this. Since you don't want to end up living in debasement, you want to understand that at the core, the debasement trade is a bet. You could call it a hedge, but it's a bet that fiat currencies are on a long, slow decline. Not necessarily in a Chicken Little doomsday, the sky is falling tomorrow way, but in a very boring, very real macroeconomic long-term trend way. Here's the logic. Governments are spending way more than they earn. Deficits are exploding. Debt levels are climbing into the stratosphere. And to keep that game running, central banks are printing money or buying government bonds, which expands the money supply and quietly eats away at the value of your dollars. And basically the government's fine with this, by the way, because when they inflate the currency, they get to shrink the debt relative to GDP, and they get to kick the can down the road and quote unquote solve the problem. But it basically nukes everybody else. Your savings buy less, your wages don't keep up, and your purchasing power gets eaten alive, while the government gets to say, oops, we'll try for a soft landing next time. And of course, that alone is enough to spook investors, but then add in this. Real yields, which is interest rates after inflation, are negative or barely positive. So even if you park your money in bonds or savings accounts, you're still slowly bleeding purchasing power. Throw in currency depreciation. As countries print more and run massive deficits, their currencies weaken and imports get more expensive. So what are investors doing about this? Well, they're clearly bailing out of cash and fiat-denominated assets and rotating into hard, scarce, inflation-resistant assets. This is why gold and Bitcoin have been ripping, because people are finally seeing it. They're not just front-running inflation anymore, they're front-running a slow, systemic rug pull. This, in a nutshell, is the debasement trade. And now Wall Street is not just playing along, they're literally branding it. They're openly saying, yes, we're buying gold, Bitcoin, and real assets to hedge against fiat erosion, which is pretty wild because that used to be considered a tinfoil hat take. I mean, personally, I don't get how US Treasuries were ever considered risk-free, but hey, that's just me. But now this thing is no longer just crazy gold bugs and Bitcoiners screaming into the void. It's front page financial commentary. So what has changed and why now? We're going to get to that in a second, but first we'll talk about what it means when Wall Street starts saying the quiet part out loud. So like I said, this isn't just a niche thesis anymore. It's not just crypto Twitter and weird alternative digital assets. When JP Morgan and the Wall Street Journal start naming the debasement trade and openly grouping Bitcoin and gold together, you're definitely seeing something shift. This is Wall Street finally giving its permission. And no, I don't necessarily think they suddenly believe in Bitcoin's core mission or all the suits have suddenly been orange-pilled. They're just finally seeing what's become undeniable. The numbers don't lie. Now, it's just about rational portfolio construction. They're waking up to the fact that the old 60-40 portfolio model doesn't work in a high-debt, low-yield, post-trust monetary environment. And that safe is not what it used to be. So the same institutions that once mocked Bitcoin are now quietly reallocating toward it for the same reason that they're buying gold, to hedge against the structural debasement of fiat. Make no mistake, I don't think they care about decentralization. They're not here for self-sovereignty. They're here for the bottom line that fiat is getting weaker and governments can't print more Bitcoin. As we know, this is always what happens with big ideas. You've heard the saying, first they ignore you, then they laugh at you, then they attack you, but then they find themselves copy-pasting the Bitcoin white paper into their annual reports. So if you're sitting here thinking, well, haven't Bitcoiners been saying all of this since 2009? Yes, of course they have, which brings us to the twist, because the new trade that Wall Street is suddenly obsessed with is just Bitcoin's core thesis in disguise. That's where it gets kind of funny, really, because all the talk about fiat debasement and hard assets and monetary hedges, it just is the Bitcoin thesis, has been from the very beginning. Bitcoin was literally created in response to the 2008 financial crisis, the bailouts, the money printing, and the central bank insanity. Chancellor on brink of second bailout for banks. Does that ring any bells? If it doesn't, if you didn't know, Satoshi literally coded that headline into the Genesis block when Bitcoin was first launched. And for years, Bitcoiners have been shouting into the void, the system is broken, the money's being debased, you need a store of value that no one else can print. And what did Bitcoiners get for being that canary in the coal mine? They got mocked, dismissed, ridiculed, called a scam, a bubble, a toy for nerds and crackpot libertarians. But now, the world's largest financial institutions are just like, oh, wow, we need to hedge against currency debasement. Let's rotate into gold and maybe a little bit of this Bitcoin thing too. Okay, cool. Welcome then. We've been here all along. Bitcoin didn't suddenly become valid. Wall Street just finally found a narrative lens to justify to them what the Bitcoiners have known all along. Bitcoin was always the store of value, was always going to become this globally recognized, adopted store of value. It just took the world this long to start catching up. What we're seeing right now is Bitcoin's thesis go mainstream without them actually saying and admitting that it's Bitcoin's thesis. They're calling it the debasement trade, but it's not just a trade. It's a tectonic shift in how people think about money. And it's not just a hedge for a rainy day. It's an ark built for the flood that we're already in. Here's a stat that I recently saw that I think will melt your brain. Since 2004, GLD, which is the gold ETF, has officially outperformed the S&P 500. And that's with dividends included. So just let that sink in. If you don't understand what that really means, as one person I saw on Twitter put it very succinctly, you've got SPY riding 4 full QE cycles, trillions in global liquidity, the biggest tech boom in human history, buybacks, earnings, innovation, liquidity injections, all of it, and it can't outpace a shiny yellow rock. With no earnings, no buybacks, no yield, gold won that race over the last 20 to 21 years. On price, on total return, which tells you something massive, but somewhat quiet, is happening. Quote, this flips 40 years of portfolio theory on its head. It's not just a commodity rally, it's a referendum on monetary credibility. When an inert metal outperforms the most financialized asset class in existence, that's not about risk on, that's about capital fleeing risk itself. It's not chasing growth, it's chasing escape velocity from inflation, from counterparty risk, from fiat debasement. And the market already knows fiat is breaking. It just doesn't say it directly, it just whispers it through prices. Gold's recent outperformance is the quiet collapse of the old model. And if that's true for gold, what do you think happens when more and more people realize Bitcoin does all that, but without the vaults, the centralization, or the counterparty risk? That's where things go next, because there's a clear shift in narrative happening from fringe to mainstream, from digital beanie babies to institutional allocations. When the Wall Street Journal is running front page pieces about gold, Bitcoin, and the debasement trade, when central banks are quietly swapping treasuries for gold, when JP Morgan is telling clients to group Bitcoin into macro hedges, That's a signal that this is no longer some niche ideology. It's becoming orthodoxy. The world is slowly waking up to the idea that fiat money is designed to erode. It sounds silly that they didn't know that already. I know. But they're finally figuring out that if you don't get out in time, it's going to erode you with it. So now the conversation isn't just, it's crazy to own that Bitcoin thing, or should you own any Bitcoin? It's, why wouldn't you at least own some? And really, it's becoming what percentage, not if, but what percentage of your portfolio should be allocated to Bitcoin. And yeah, the debasement trade might sound like some snappy new phrase that mainstream media cooked up and we throwing around more and more. You're going to hear it a lot more. But if you're a Bitcoiner who's been around for more than 5 minutes, you know it's not just a trade, it's an entire worldview, one that Bitcoiners have been living since day one. Because the thing is, the shift is slow until it isn't. Adoption creeps until it cascades. If you've been around, I'm sure you've heard gradually, then suddenly. When gold and Bitcoin start getting lumped together by the biggest banks on earth, you're watching the dam crack in real time. So if you're here now, you are still early, but probably not for much longer. Because this isn't just a vibe shift, it's structural change. If you've been paying any attention to Lynn Alden, you've definitely heard the phrase, nothing stops this train. Not the Fed, not politics, not higher interest rates, and definitely not lower interest rates. The deficits are baked in, the debts are too big, and the system is too financialized. That's why this time's different. Because now it's not just retail FOMOing in. It's institutions, big banks, and central banks. After 70 years of dumping gold in favor of treasuries, they are reversing course. Gold is climbing back as a percentage of sovereign reserves. Why? Because they think gold is the one thing they can hold in their vaults without counterparty risk. They still believe no rug pulls, no printing, and no yield curve control. But Bitcoin is gold without the vaults, without the paper gold printed on top of it, and with a total finite supply cap, a terminal inflation rate of 0. This is not just another asset rally, it's the repricing of what money is. And yeah, of course, there'll be corrections along the way. Gold's probably going to cool off at some point. Bitcoin is consolidating now and probably will many other times. But the most important thing is don't get shaken out, because this is not just a bubble. It's the slow death of fiat being priced in. So the debasement trade is the new hot label, but the truth is it's just Bitcoin's white paper with a Wall Street logo on it. And that's the clearest sign yet that we've crossed into the next phase. Bitcoin isn't a weird outsider anymore. It's beginning to be treated like monetary infrastructure, a serious player in a broken system. So if you've been stacking sats all this time, you were front running the future. You probably knew that all along. But if you're new here, you're not too late, but the window of disbelief is starting to close. So share this video with someone who still thinks Bitcoin's a scam, or send it to a friend who's bragging about buying gold and doesn't realize buying gold is just the halfway point to getting to Bitcoin eventually. If you enjoyed this video or this stuff clicks for you, hit the like button, subscribe to the channel. Zap me sats via the QR code on the screen using your Lightning wallet. Click on this playlist to learn more about Bitcoin, because you never want to forget that Bitcoin is inevitable.